Hello, everyone. Welcome to episode 2 of the Dream Builders podcast. Again, I'm Charissa.
And I'm Marcie, and thanks for joining us today. We're going to talk about today whole life, specifically final expense. But Carissa's going to briefly just let you know that there are various different types of policies.
That's right. So we many times people ask us about the differences. We're going to dive into each of these later, not today, but there's different types. First of all, there's term policy. You can get millions of dollars worth of term, or you can get just a few $1,000s worth of term. But usually it always lasts for a certain number of years. So like maybe 10 years, 20 years, 30 years. Some people even get annually renewable term, but it does not build cash value. So it's kind of like car insurance. You use it or lose it. Then there's whole life, which is guaranteed to last until age 100 or age 120, depending on the company. And if you actually live until age 100 or 120, they'll write you a check for whatever your death benefit is. So, which is kind of cool. But it does build cash value, unlike term. So if you cancel it at some point or surrender your policy, they'll actually give you the cash value in your policy. Then there's universal life. There's several different types of universal life. We'll dive more into them later. But universal life is a cross between term and whole life because the cost of insurance goes up over time. But it also builds cash value. So as the cost of insurance grows, they'll start taking money from the cash value to pay for the policy. So those are the 3 different types. And today we're going to talk about whole life, specifically the type of whole life, like Marcie said, that's often marketed as final expense because you don't have to get, or children's whole life, because you don't have to get a physical exam. It's easy to qualify for. And usually the max you can get for some companies is 100, but many companies you can only get a max of 30, 40, or 50,000.
Correct.
Mm-hmm.
All right. So let's just start off with the basic question, which Carissa's going to ask me.
Mm-hmm.
Basically, why should you get a whole life policy when you're young?
Yes.
And the answer to that question is you never know what's going to happen tomorrow. You can lock in rates when they're lower because, like Charissa had said, whole life policy tends to be expensive, especially if you wait until you're older. And it all has to do with your health, right? Even though we're sitting here and we're saying to you, it's easy to get approved, you don't need a physical, all of that is actually true. But when you're the healthiest is when you should actually look at getting coverage in place.
Exactly.
Because what happens? You could have a heart attack, you could have a stroke. We know, right? 45-year-old people who have had a massive heart attack. And, we go and we see them and we have to just basically tell them we're looking at a final expense policy for you. Yeah. Small whole life, right, Charissa?
Exactly. And can you even tell us a story even from your own life about why, why it would have been helpful to have locked in some type of whole life insurance when, before certain events occurred?
Yeah. So we all are on this planet and we don't think anything's going to happen. It always happens to somebody else, right? I mean, you hear those stories. Well, I actually got diagnosed with cancer. This was back in 2007. And yeah, I worked in the corporate world and I had work insurance, life insurance. Okay. Thank God, knock on wood, you can see me today. It's 2023 and I'm healthy and I'm still here. But what happens is, if you have a history of cancer, you can't be going around getting $250,000 of coverage. It doesn't work. Nobody's going to do that because now you are a risk for them. So, if I had paid attention or even thought about it, and honestly, I didn't. I don't really think a lot of people in their 30s and some people even in their 40s think that they need to get insurance. But all I had was my work insurance, and if I had passed away, then that's what my family would have gotten. But let's say I wasn't working, okay? And I lost my life insurance. Now they have to pay for my burial. and they have to clean out my house, and they have to, my finances, they have to deal with all of that.
Right.
So I would have left them in not a good situation, but thank God I am still here, and I did get coverage in place.
Good. And so I mean, that's why it's so extremely important to not act like we have a crystal ball and know what our health is going to be and know even if we'll still be here, right? So often people are taught to just buy term and invest the difference. Well, you can buy term, that's fine, but in addition to that, we should always have some type of whole life policy, right? So that when that term expires, we'll still have that whole life. And what do we see, Marcie? Many times people will wait until their term either expires or it's about to expire. And now they're much older. Their cost of insurance is much higher. The companies raise their rates every year. So they're, by the time, 20 years ago, it would have made more sense to get a whole life policy. Now that they're 75 years old, it's so expensive and they want to look at us like we're crazy. And we're like, you're like 8 years away from when the insurance company thinks you're going to die. So of course, your rate is much more expensive now. And no, we can't get you $150,000 worth of coverage at this point. So sorry.
Right. No, you're actually you know what? You might cost us money. Right. So we're just going to charge you more and you can just keep paying it. Right. The point also is that once you have a history, some type of medical, you can have diabetes type 1 at age 30. You could have various things, cancer, heart attack, stroke. Is that if you don't have coverage, then you're looking at a different type of insurance, right? It's still, it's final expense, but if you're not healthy, it's called guaranteed issue, which is a small whole life policy, literally a small whole life policy. So basically the insurance company is saying, hey, we're not going to ask you any medical questions because we already know you won't qualify. So we're going to give you the opportunity to buy insurance, but in the first 2 years, if you were to pass away, your beneficiary would only get what you put into it. So that means if I had a $20,000 policy and I passed away prior to those 2 years, and folks, that's 2 full years, not just till you hit year 2. I think that's really important. A lot of people get confused about that. But your family's only going to get a little bit of money. And then once you pass those 2 years, then they get the full benefit of it. So that's why we're basically saying that you should do it when you're young, at least get something small in place so that you always know that you have it, right?
And there's a particular, to your point, Marcie, there's a particular life insurance company that we won't mention that is, everyone can see on TV that markets their life insurance policies, right? But in what they don't tell you is, what is it the fine print says? Limited benefits for the first 2 years. What is that? That's a guaranteed issue policy. That means that for the first 2 years, your death benefit is only what you put into it. And then, of course, they also add 10% to it as well, just to make it worth your while. But it's only what you put into it plus 10%. So it's not the full, it's not the full death benefit that you think you're going to have. So, and then the problem is that they market it to everybody, and they only should be marketing it to people who are sick, people who have active cancer, people who just had a heart attack a few months ago, people who know that they're still going to be here after 2 years, but they want to make sure to go ahead and lock in something now. And instead,
sorry, I didn't mean to interrupt you. That is why we're here, folks. This is so important because people will just say, oh, I just need $10,000 of burial. And they'll be like, oh, I just saw something on TV, or I just got something in the mail. Right? And you would not believe, tell me if I'm wrong, Charissa, I could sit with people and they either already have a guaranteed issue and they're completely healthy, or they want to do a little bargaining. And bargaining, what I mean by that is they want to go the cheaper route, and they don't even realize that if something happens to them in the first 2 years, that their family is just out of luck, and they're going to have to pay out of their pocket for them. So having something that's inexpensive doesn't always make sense. It has to be affordable, but look at it this way, Carissa. People have car insurance. People have homeowners insurance. They have insurance on their cell phone. They pay renter's insurance. And quite frankly, sometimes you have insurance on your TV.
Yeah,
okay?
right.
And you're right. And you're willing to pay for that. But, life insurance? What do you mean? So it's so important. So
Very
important.
much so. I know. It's like, well, how valuable are you? And what we have to think about is, what kind of position am I going to leave my family in if I pass away tomorrow? If I pass away 10 years from now? If I pass away 20 years from now? If I pass away, depending on your age, if I pass away 50 years from now, what kind of position? So you actually have to have different, you have to have different scenarios. You got to have different stuff that is in place to cover all those different scenarios, right? It's like we're going to dive into term later, but sometimes term is appropriate for your short-term planning. But then you also got to think about the long-term planning as well. What's going to happen if I've just refinanced for my mortgage 30 years from now, and then I'm trying to get some insurance, because I don't want to leave my spouse with that mortgage if I pass. Well, we have to think about, Marcie, you were going to mention what other things you can, besides burial, what other things can you use a final expense policy for besides just burial, final expense coverage?
Right. So, final expense is about your final expenses. Okay? That's how you have to look at it. It's not just about your burial. It's about much more than that, because most people don't just pass away and all they need is money to bury their family. Okay? They have bills, they have cars, they have homes, they might have debt. There's just so much. So final expense means taking care of everything for someone. So what Carissa said, for example, is that, we all just refinanced our homes, or everyone who owns a home refinanced because the rates were so low and they did 30 years again. Right. Well, guess what? You might not be around in 30 years. So what people do is they would get 1 or 2 years, for instance, of mortgage payments.
Oh,
for the mortgage.
So you don't even have to get you don't even have to get enough insurance for your whole mortgage to be covered. You can just get 1 or 2 years worth of payment. Okay.
Yeah. And why would you do that? Because someone passes away. You really and truly, I remember this from my dad, is that when someone passes away, you don't want to make any major life decisions. And you don't want to take this big sum of money and throw it at the mortgage company, because, hey, now you need to live. And your family has basically saying, like, hey, honey, you know what? Let's just get you 2 years worth of mortgage payments. That way you don't have to make a decision. Right. And in the end, folks, that all that's doing is giving you way more equity. And then in this instance, that is your life insurance policy, right? That's what it is. So again, I'm glad that you asked that, because it's not just about the actual burial. It's about your family taking care of things.
So true. And think of the peace of mind that would give to, let's say, we always use the example of a spouse, but what about a child of a single, you have a single parent or a parent who's lost their spouse and they have a home. Well, what can a child do with a final expense policy? They can clean up the house and they can get it ready they can get it ready to sell. And then, like you said, the house is the life insurance policy. All the equity that they're going to get from the sale of that house, now they have that money. How many times we sat with people, Marcie, who think they've got to get the whole mortgage paid off and they die and they're 75 years old. And we're like, no, believe me, you don't want to get that much insurance at this age. That's going to be astronomically expensive. No, all you need is just 1 or 2 years worth of mortgage payments. And then
right. And parents, right. And then parents are taking care of their kids. And maybe it's a house, Carissa, that's been in the family for a long time. Right. And John wants to go and put it in his name. Well, maybe his folks left him X amount of money to do exactly that. So you have to just think outside of the box and just not be like, It's burial. People don't really call it burial coverage anymore, Charissa. They call it final expenses because, as we say, it encompasses a way lot more.
Yes, it does. Yes, it does. It can be used for so many different things. I mean, and people underestimate even, how many times have we sat with people and say, oh, I'm just going to be cremated. And they don't, yeah, okay. So there's cremation costs, right? Which will probably go up much higher as time goes on because more and more people are being cremated. But then, like you said, you got to think of all your bills. So what a person should do and what an agent should do with you is sit down and say, okay, what's it going to look like when you pass as far as bills, as far as maybe leaving some income for your spouse, you want to be, or leaving something for your kids. There's a lot that, maybe you want to leave an inheritance for your children. There's so many things. And a good agent like us, will sit down with you and ask you all those questions so we can ascertain what it is that you want to make sure happens when you pass as far as, financially.
Right. So one more thing to think about is, and we had to learn this in order to turn around and educate our clients, is that I could be sitting with a couple that is in their 60s or 70s. And another way to look at it, their home might be paid off, Charissa. They might not have that much debt. But they're going to lose their spouse's Social Security. Yeah. So another way to approach this is, John wants to leave Mary 3 years of income. Yes. So he basically is going to take his Social Security check, times it by 12, and times it for 3 years. So I wanted to add that in because I think that that's really important. Yes. It's not just the home, which that is huge. That's your place where you live. But you're also going to lose that income. And you may not have, Charissa, a hefty 401k. You might have used up all your retirement money at this point, and you might just be living on Social Security. Yeah. So I want to throw that in there.
We live in we sit with so many people in that exact same situation, right? When their spouse dies, they might even thought of that when they die, the spouse is only going to be able to get the higher of the two Social Security checks. They're not going to get both anymore. So their insurance their income might be cut in half, or with a huge percentage is going to be gone. So I love that the Social Security replacement plan is key.
Right.
One spouse dies, now you're just left with the other income. So yeah. Super important. Thank you so much, Marcie, for bringing that up. That's key.
You got it.
And then, of course, people don't think of unpaid medical bills. Hopefully everyone dies peacefully in their sleep, right? But what about those who have medical? What about, hospital? What if someone dies in a hospital and now someone's left with a multi-$1,000 worth of hospital bills? Guess what? Those don't just get canceled when someone dies. Someone's got to pay for that. So there's so many things to think about. If someone passes. And then for those who are like, oh, I can only, what would you tell Marcie? What would you tell someone, Marcie, if they are older when they get a final expense policy started and it is very expensive and maybe they can't afford to get as much coverage as they think they need? What would you tell them?
I always tell people that no matter what your situation is, you get the amount of coverage that's affordable. So if you're on a fixed income, we need to be able to figure out what is affordable so that you do not cancel that policy because you need an extra $75. Right. And quite frankly, I've told people that smoke, like, all right, well, that's one less pack of cigarettes a week. So, well, I don't know, what's that, $40?
Right.
You have to make people realize maybe one dinner out, you don't do a week. Right. You only do it twice. Or whatever it is.
It's a matter of priorities, right?
Yep. Right, 100%.
And then, of course, we've all sat with the clients, too, who they are pinching every penny and they're tracking every single dollar. I sat with one client, they're like, oh, did you buy a cup of coffee yesterday? Okay, let me write that in. They were literally tracking every dollar, and they've kept their policies going all this time. Why? Because it's a priority. They're both on disability. They make very little, but it's a priority for them to keep their life insurance policies in place, so they do.
So I have one story for you. We have many, but this is one. There was a point when I was doing different types of insurance plus doing final expense burial. And I can remember meeting a gentleman who was homeless and he was living at a shelter, okay? And obviously you know that he's not living on much money. But it warmed my heart to know that his main priority was making sure his daughter didn't have to pay for his funeral.
Wow.
And so that shows you right there that someone's quality of life isn't great while they're living and they're struggling, but they're not going to leave that memory with their kid.
Yes.
I just remember that story.
It's amazing.
Yeah. And so it's
right.
sweet.
I love that story.
Yeah.
Thank you so much for mentioning that.
Yeah.
And it's really a matter of how much do you care? How much do you care? Because it always breaks our heart, right? When we sit with the people who are like, you know what, I don't even want to do this. I don't want anyone getting rich when I die. I don't care what happens to my body. They can throw it in the backyard for all I care. We've all sat with those people too, and we just leave in disgust. Like, if you don't care about your family, there's nothing I can do for you. Because even if you do put this in place, you'll cancel it the next day.
Or what else do they say, Charissa?
They say, oh, it's too expensive, whatever.
Or I can save $20 a month and I'll just put it in a savings account.
And it's well, how much do you have in savings now?
Yeah.
Literally. How much do you have in savings now? Oh, I have $600. Okay, so how's that going for you to save $20 a month? And how long is it going to take you to save $15,000, $20,000? And you don't know if you're going to be here tomorrow, much less when that savings is done. So, yeah, people have said that so many times, and it's so awful.
Yeah, and that's why we're sharing stories, because something's going to click, and you're going to go, oh, yeah, I didn't think about that, or oh, I know someone who did that or didn't do that, right? People
really think they can save their way into life insurance. It's like, no, you can, but you got to start really early. Not when you're 8 years old.
Yeah, that's not what you want your kids to remember you for.
It's like, oh, well, hopefully they left me $500 in their checking accounts or savings accounts. Just enough to do nothing. So yeah, super important. You got to think about your family. You got to think about, starting something. We've gone all the way from starting something when you're young, but we've covered a lot here. And I think it's been good just to have this discussion about things people don't think about and stuff that we've heard just about everything now in the field. So it's good to talk about the stuff we've heard. So yeah. All I had as far as topics to talk about.
I think we're good for today.
So next time we'll move on to another topic. And again, if you have anything you want us to cover, drop it in the comments. We'd love to see it, and we'll make sure to cover it in a future podcast. Thanks. Have a great day. Thanks for watching.